a comprehensive look at trends, fund profiles, and more in Exploring ETFs.
There's been a lot of talk lately about cybersecurity and hacking, and to that extent, our ETF research director, Nina Mishra, has felt that it's important for investors to know what they're up against when thinking of cybersecurity ETFs to invest in, right?
Right. So, the world is becoming more digital and more interconnected, so that gives us a lot of opportunities. But at the same time, it creates some challenges too, because there is so much information available online.
Sure.
And there are so many sophisticated tools available to access that data, process that data, and share that data.
Right.
So that is why cyber attacks have been on the rise. And consequences of hacking can be really huge. In fact, it is difficult to quantify the consequences most of the time. According to a cybersecurity report issued by Cisco yesterday, it's the annual cybersecurity report, companies that experienced breach last year, they had substantial loss of revenues, customers, and reputation.
And that was yesterday, January 31st.
Yes,
right,
exactly.
that came out. So what do investors need to know then about these ETFs that have this exposure?
Obviously, cybersecurity has been in focus. We also saw reports of Russian hacking and massive data breaches at Yahoo. And so it is reported that President Trump will issue an executive order on cybersecurity soon. So investors, I think they need to look at these companies. They provide a lot of growth opportunities. But at the same time, these companies are, most of these, especially pure play companies in this space, they are younger, riskier companies. So instead of investing in those companies directly, I think ETFs provide a better way of gaining low risk and diversified exposure to this high growth space.
Now you're going to profile a couple of different ones here. Are these the only ones that exist, or are they just the most popular?
These are the only two ETFs that focus only on cybersecurity stocks. Yes.
Okay. So the first one is from Pure Funds, right? Pure Fund Cybersecurity ETF.
Yes, the ticker is HACK.
HACK, right? Appropriate.
Yeah, very appropriate. This was the first product to focus on this space. It launched in November 2014. Very appropriate launch timing, because it came right after some very high-profile cyber attacks, including Sony's, where North Korea was reportedly involved.
Yes.
So this was actually one of the most successful ETF launches ever. This product had gained $1 billion in assets under management within a matter of a few months. It follows a modified equal weighting methodology, so there is not too much focus on a single company. Because of diversification, single company risk is largely eliminated. A bit expensive, 75 basis points in expense ratio.
Sure.
And it has 34 holdings with a minimum market capitalization of $100 million.
Okay, 34 or 35?
35, sorry.
Okay, I just want to clarify that.
Yeah, 35.
All right, and by comparison, there's one from First Trust NASDAQ. That's the First Trust NASDAQ Cybersecurity ETF.
Yeah, the ticker is CIBR. This came after HACK in July 2015. It made its debut. It follows a modified liquidity weighting methodology, slightly cheaper with 60 basis points in expense ratio. This has 31 holdings, and the minimum market cap is slightly higher at $250 million. Because of the liquidity focus and a higher minimum market cap requirement, this ETF will focus on slightly larger and more established companies. HACK will probably hold more newer, smaller companies.
Okay, so how do these two now stack up against the S&P?
So on this chart, I have compared the one-year performance of these three ETFs, these two ETFs, and compared that with the broader market ETF, SPY. So as you can see, CIBR was the best performer. It had about 35% return in the last 1 year. The other one, Hack, had about 30% compared to broader market return of about 22% over the past 1 year.
So the two are kind of performing almost neck and neck.
They hold kind of very similar companies because it's a new space. There's limited number of companies. Their whole number of holdings is almost the same.
Right.
The only difference is, the differences are that cyber is slightly cheaper and it focuses more on slightly larger companies.
So as somebody who keeps an eye on the space all the time, as more emphasis gets placed on cybersecurity, do you see more of these ETFs popping up?
Yes, I would not be surprised to see more ETF in this space maybe this year or next year because there is so much focus on this space as of now.
Okay. In the meantime, do you own either of these two?
I don't.
All right. Check out more ETF information on our website, Zacks.com. As always, you can get there starting with the homepage, Zacks.com, and then in this case using the Funds tab in the top toolbar to get to the ETF section. With Nina, I'm Terry Ruffalo.